Welcome to Echo 311, Study Session 7, Control Account. Introduction. It is an important practice for organizations that buy and sell goods and credit to monitor its debtors and creditors. Control account is one of those records prepared and maintained by organizations to know and monitor their total debtors and creditors. Debtors are those owing the business, while those the business is owing are regarded as creditors. Learning outcomes. At the end of this study session, you should be able to 1. Define control account. 2. State the classes of control account. 3. Outline the advantages of control account. 4. Master the format of control account. And 5. Prepare simple control account. What is control account? It is regarded as a memorandum account which contains the aggregate balances from ledgers or accounts to which it relates. Control accounts are also known as total account or self-balancing account. Control accounts perform the same purpose with suspense account because they are also used to locate and correct errors that affect trial balance. Control accounts are maintained for the business indebtedness to its suppliers or to the customers' indebtedness to the business. Control accounts are part of nominal or general ledger. Control accounts also form part of double entry system because items of transactions are recorded in them using double entry principles. Class of control account. There are mainly two classes or division of control account, namely sales ledger control account and purchase ledger control account. Sales ledger control account is prepared by an organization to reflect the customer's indebtedness to the business. It is also known as total debtors control account. It is an account which contains in total the detailed entries in the debtors account in the sales ledger. Sales ledgers are mainly accounts relating to the debtor of a business. It is the personal account of the business debtor. Purchase ledger control account is prepared by an organization to show the business indebtedness to its supplier. It is also known as total creditors control account. It is an account which contains in total the detailed entries in the creditors account in the purchases ledger. Purchases ledger are mainly accounts relating to the business's customers or creditors. It is the personal account of the creditor. Importance or benefits of control account. 1. Control accounts help in minimizing the rate of fraud in an organization. 2. They also help to save time in detection of error. 3. They help save time in correction of error detected. 4. They help to monitor the business total debtors and creditors. And 5. They help to ascertain the total debtors and creditors of a business at a particular time. Complete format of control account. Below are the format of both the sales ledger and purchase ledger control account. Sales ledger control account. On the debit side, we have balance brought forward, credit sales, cash refund to customer, dishonored check, interest charged on overdue account. On the credit side, we have balance brought forward, cash and check from customers, return inward, discount allowed, bad debt, credit note issue, contra settlement, and then we have balance carried down, and then the balance brought down is reflected on the debit side. For purchase ledger control account, on the debit side we have balance brought forward, cash or check to supplier, discount received, return outward, credit note received, contra settlement, balance carried down. On the credit side we have balance brought forward, credit purchases, cash refund by supplier, and then we have the balance brought down on the credit side. Example: use the following details to prepare the sales ledger control account of Barclay Ventures. Debit balance on 1st of July 2013, 1,894 naira. Total credit sales 10,290 naira. Check from customers 7,284 naira. Cash from customers 1,236 naira. Return inwards from customers 296 naira. Debit balance on 31st January 2013, 3,368 naira. Sales ledger account. On the debit side we have balance brought forward of 1,894, and then we add sales to it, sales of 10,284, and then we have total 12,178 naira. On the credit side we have bank 7,284 naira, cash 1,230 naira, return inwards 296 naira, and balance carried down 3,368 naira. And both sides will give us total of 12,178 naira. Sales ledger control account. Use the following details to prepare the purchases ledger of Barclay Venture. Credit balance on the 1st of January 2013, 3,890. Check paid to suppliers 2,620. Return outwards 95. Credit purchases 4,976 naira. Contra entry 1,000. Credit balance on 31st January 2013, 5,151 naira. Purchase ledger control account. On the debit side we have bank 2,620, return outward 95 naira, contra entry 1,000 naira, balance carried down 5,151 naira. On the credit side we have balance brought forward 3,890, purchases 4,976, and the total on both sides gives us 8,866 naira. And then we have a balance brought down of 5,151 naira on the credit side. Summary. From this session, you have learned the meaning of control account and why organizations keep control account. You have also learned the principles involved in entering items on both sales ledger and purchase ledger control account. This is the end of study session 7. Thanks for listening.